kick off with the move in Sky shares there. You make the point that many sides in this deal are trying to claim it as a win. Ultimately, who do you think won here?
Well, probably football yet again with a decent payment to football. I think what is really interesting here is the share price now, as of the close last night, is trading above the 10.75, which I think was the offer price for Sky, and there has been quite a lot of pressure by shareholders looking for a higher offer price for Sky because they didn't feel like initially it was enough, and people have waited a long time for this deal to come through. It's been a long time in the making now.
So ultimately, what do you think happens then?
Well, it's going to be interesting to see. I'm not in a position to give any great wisdom on this one, but I have the feeling that they may need to pay a bit more.
Charles, let's shift focus a bit to the macro picture. We've been spending a lot of time talking about U.S. inflation. U.S. equities really taking it in their stride. But tell me about the U.K. response to the U.K.'s own inflation report. It seems the writing is really on the wall here when it comes to a more hawkish Bank of England. What's your assessment?
That's looking increasingly inevitable. And you've got to come from the place that interest rates are at a pretty low, have been a pretty low rate for some time. We've had a small initial rise already, and the writing does seem on the wall that higher rates are inevitable sooner or later. But of course, that is a much better place than we were looking at 2 or 3 years ago, where deflation was, a serious problem.
Charles, maybe you can explain to us what's going on in Europe. It's a bit hard to understand sitting here in Asia. I mean, the economy seems to be doing well. The very early stage in the monetary tightening cycle. You get a bit of disturbance out of UK equities, and the stock market is carried out. I mean, why is the European market performed so much worse than the US market over the past couple of weeks when the problems supposedly are centered on the US?
I think the Europe situation in equities is, we've had a pretty strong run. Markets in Europe are a little bit more disjointed than perhaps the US at times in Europe, and investors have still got good memories of previous crisis and what can happen to equities. So they were a little edgy. One does need to bear in mind that the equities worldwide have done, particularly in the US, have done incredibly well. So when you see a correction, I always think, if you see a correction in the US, it's always magnified more around the world. So Europe, just tends to fall more.
That being said, Charles, do you think that was the worst of the correction? Or when it comes to your view of European equities, would you still be bracing for further fallout?
Well, this is the big question here. Is this correct? Is this just a timely warning of what markets can do, or have we reached the top of an equity cycle, if you like? The rally we saw, if you look at it on the chart, really went sort of exponentially up in the last through January. That normally is seen as an ending in equity rallies, and the strong bull market cycle is likely to have a rest after it or go sideways. And I think inevitably, when we see that sort of a strong run, and investors make a lot of money, there's a lot of leveraged equity building that goes on, and people are forced out of these positions by essentially the margin clerk who says, we need margin or sell.